So, good morning, everyone. My name is Victor. I will be moderating this panel. Today, we will be talking digital securities, capital markets, and tokenization. Let's do a quick round of intro. So I suggest we start with Coty.
Ladies first, right?
Exactly.
Okay, so I'm Coty de Monteverde. I work at Banco Santander. I'm leading the Crypto and Blockchain Center of Excellence for the whole group since 2018, and I'm recently also CTO, global CTO for the group. Thank you.
Let's continue with Michael.
Yeah, I'm Michael Cyrus. I'm working for DekaBank. I'm responsible for short-term trading. At DekaBank, we were among the first to create securities lending on a blockchain, and we issued and structured a couple of digital securities. And DekaBank also created a startup, Swiat, to focus on the development of a settlement structure based on blockchain for digital securities.
Klaus.
Yeah, my name is Klaus, and thanks for having me. I'm working for DZ Bank in the transaction banking department. I'm currently busy with following ECB with the Digital Euro project and trying to build the commercial bank money token.
And Arnaud.
Hi everyone, delighted to be there. So I'm Arnaud Misset, Chief Digital Officer at CACEIS. CACEIS being the custodial arm of Crédit Agricole for institutional investor. We are now really deeply involved into tokenized asset topics. So I'm really happy to share our views today.
So let's get in tokenization. I'm gonna say a quick definition, but I think everyone knows it because everyone will talk about it over the next 2 days. Digital representation of ownership or an asset, basically, it could be equity, debt. That's what we will be talking about. As a starting point, what I'd like to hear is more about the point of view of banks, as we have 4 banks here, on the future of digital securities. How is it seen internally? Are you seeing it as a potential future or as a certain future? And the underlying question is, do you see this so far more as a tactical play, or are you going really with a strategic point of view? And let's start with Arnaud and CACEIS.
Yeah, thank you, Victor. So it's pretty clear on our side that it's not tactical. It's clearly a strategic move. And we deeply believe that there will be a shift from traditional finance to tokenized one. Of course, it will take time and it will happen in 1 or 2 years, but we clearly see now something happening. If I just take a few examples, when we are talking about tokenized financial instruments, you can talk about the bonds, the equity, the fund shares, and so on and so forth. Having a look at what's happening on the bonds market, there are many experimentation live. More or less every bank is already having some tokenized bonds. It's a little bit less true if we talk about equities, and we see also some important projects on the fund share side. We've got, just to name them, some really known platform like ISNES in France, Funds DLT in Luxembourg, and so on and so forth. So I really think it's a strategic move, but there are probably some remaining hurdles. The first one being, if we talk about bonds or equities, for instance, the lack of a secondary market. Maybe probably pilot regime will help us to progress on that side, but at the moment there is no secondary market, and we see that managing everything OTC, it's really not enough. So it's not working the way it should be working. The second one is regulation itself, because you know us as a bank, we're still really afraid about regulation. Should we do this? Are we allowed to do that? We're not so sure. So we made huge progresses, for instance, in France with the PSAN status, Digital Asset Service Provider. On the European level with MiCA, we've got the pilot regime. I think we'll get back on this little bit later on in the discussion, but it's still a really important part. But we're still missing clear messages saying you are allowed to, and you won't be punished for this. And finally, maybe I would say the last point is that we probably put the focus too much on the tech and not enough on the business side, meaning that at the moment, at least in Europe, what we can see is that we have very efficient marketplace system. So why should the investor move from the traditional to the tokenized financial instrument? And that's probably and something that would be interesting to discuss further, but we should probably focus on how to reconcile both worlds, bringing the added value of tokenized financial instruments like no reconciliation, instant settlement, reporting shared at the same time with everyone, with the traditional way to invest or to redeem. So that's all on my side. Thanks.
Let's continue. Klaus?
Nothing to add,
Okay.
really. We're absolutely the same
anything to add on this topic?
I think that we all agree that it's a strategic move for all of us, that we recognize the transformative evolution that this is going to bring to the current siloed platforms infrastructure that we have. In that sense, we can see that most of the large financial institutions and central banks are already understanding the implications that tokenization is going to have when all assets are going to be digital programmable objects. And in that sense, at Santander, we've been working on this since 2016, and we have achieved significant experience on tokenization, both of securities with our digital bond program, where we've already participated in 3 issuances on the blockchain of bonds, and also important, the tokenization of cash. And in that sense, we are founding members of Finality, and I'm proud to say that in the coming weeks, we will probably have the digital pound already in production, backed by reserves at the Bank of England.
Yeah, I think I would underline it is strategic. At DECA, it's the first time ever that the DECA Bank has created a startup in this space, and we are also having one of the larger investment budgets into this area. So we certainly do think that this is a strategic market initiative. That said, we have been doing this now, I think we started somewhere in 2016 or 2017, and we also find that it's not just enough to be investing into this area, to be an investor in digital assets, to be an issuer in digital assets, to be a depot bank for digital assets and fulfill all these roles all by ourselves. What we actually need is an ecosystem. And setting up this ecosystem is, of course, you need a lot of different partners. And everybody at the moment is doing whatever he likes. Nobody's really linking into anybody else. And this is also why we find it incredibly difficult to establish this ecosystem in the market. So we are doing it, and we have a couple of partners, but it's certainly taking much longer, and it's not the kind of blockbuster development that everybody would love to see. So I think we found out that it's a relatively steep slope, and it costs a lot of money, actually. Yeah?
It does. Let's continue. So we see that basically it looks like a certain future, and I'm going to quote Larry Fink, the CEO of BlackRock, the next generation of capital markets, at least from his views, are digital securities. Now, when you talk digital securities, there are different asset classes. You have equity, you have debt, you have structured products, you will have funds, you will have other products. Where do you see the biggest opportunities and why? And let's continue with Michael.
I think this was more or less 20 years ago. My boss said at a conference, we should be in a position to collateralize the chairs on which you're sitting. And everybody thought this was a crazy idea. But in essence, the idea was just to be able to transfer ownership for any sort of asset. So it was not so much difficult or different to what people are doing today. Then came 2007 and 2008, and everything was flushed down the toilet. Probably with the exception of the shares on which you're sitting. So the topic is not really new. It has always been there. So I think the question is more like, where do you find the opportunity? If you do a digital security, or if you do a token, if you do a bearer bond, or if you do it in a registered form, actually that's not just a legal wrapper. It's not important. You can do all these kind of things today in numerous platforms, many of them being operated by the bourses. So where is actually an opportunity? And this is actually where we had some focus on. Number one, there is an opportunity in all kind of assets which at the moment are not digital. That said, then you're immediately talking about the illiquid part of the asset curve. Yeah, so you're talking about registered bond. You're talking about some kind of covered exposures. So the issue sizes can vary between 5 to 20 million. And then people would already say, okay, that is an interesting asset. Yes, it is. But if you take an issuer like KfW, they issue something like 3 billion in one bond. Yeah? So that's number one. So you can actually start to bring assets on a blockchain which currently have no digital ecosystem. And then there's another opportunity because many of our capital markets are extremely vertical. Yeah? So you have the big players, the big banks, and they're operating pretty much like the backbone of the capital markets industry. This is where you have the large custodians. This is where you have the settlement engines. This is where you have the big exchanges. Now, blockchain, at least in our view, now offers an opportunity to bring these business models down and be more decentralized, be more democratic, and be more horizontal. And we actually did a couple of these transactions with our savings a couple of years ago. We always had the same relationship. The savings need to refinance themselves. And then they issue bonds, and the bonds are being bought by 3 or 5 big banks in the public sector. Now, actually, balance sheet has become a scarce resource, liquidity has become a scarce resource, and the same goes for capital. We actually found that this is a good idea to bring this business down so that savings can do that among themselves. Because we have a couple of surplus savings and we have a couple of deficit savings. They don't need the big players to absorb the slack and do the surplus management. They can do it among themselves. And this is actually where we found some traction. And at least the goal for next year is that we have 20 to 50 savings probably on the blockchain to do this kind of business. So that is new. But this is where we probably need to focus on. Where do you add value? Where do you do something completely different than to where the market is as of today?
Maybe if I can just add something that has been introduced by Coty and that is major, is the cash leg. Because we'll keep on talking about securities leg, but we're still missing the cash legs until we use stablecoin, as you mentioned. But at least from a French perspective, it's not so well perceived by the central bank. And the traditional system at the moment, they have a major thing, which is delivery versus payment. So you're not sending the money without having the securities. And this is something fundamental if we want to be successful on the blockchain system for tokenized financial instruments. So we're still expecting the central bank digital currency. So that will be something at least really expected from us. But we should think as much as we've thought about the securities leg for the cash leg. I just wanted to mention this.
So that's a very good transition. So we have securities, we have the cash leg, which is critical. Now we are a bit on the other side as Taurus, as digital asset infrastructure provider, and we saw a lot of demand when it comes to tokenization, especially tokenized deposits, which is one of these elements. How do you explain such a demand, at least from a bank point of view, even if sometimes they don't always talk about it? You have the JP Morgan coin, you have the Citi coin, and you have many other projects. How do you explain such a growing demand?
Well, I think it's pretty simple when it comes to tokenized deposits. Our customers, our corporate customers are asking for a proper method to pay on private blockchains, and there is no proper method right now, in my opinion, and that's why we are trying to solve this problem. I mean, in Germany, we came up with the commercial bank money token idea. When we started this, there was no term like the tokenized deposits. We started back in 2019. We couldn't even talk about it. We didn't have the terms to talk about probably. Yeah? And this is, on the other side, this is the very basic of what a bank is doing. A bank is collecting deposits and giving out loans, creating money, by the way, on this. And this is our very basic business model. So, I mean, there is some interest, and it's getting more interesting, the idea. And I think this is the future of the commercial bank money, that we just upgrade the technology. We are not trying to build a new cryptocurrency. We are not trying to build a new stablecoin. We are trying to offer commercial bank money on DLTs readily available, because the economy is running on commercial bank money. You may like commercial bank money or you don't like it, I don't know, but you are using it. Yeah, even if you just take the Eurozone, there are 10 trillion euro commercial bank money around. This is what keeps the economy going. This is what keeps your fridge filled. This is what pays your rent. I mean, I like pixel art of apes and such, yeah, but this doesn't help really as an economy. So we are trying to set this up.
Go, Coty.
Yeah, so I think the first thing for the audience is why we need digital money, right? So we need digital money, in my opinion, for 3 reasons. First, because we are talking about tokenizing assets, and we have to pay for those assets. So we need also a digital cash leg so we can obtain that delivery versus payment. So there's no sense in having only one leg digital and the other on the traditional rails. Secondly, we need a new form of money that can interact with the smart contracts, because there will be many processes run in smart contracts that need to trigger payments. And the third thing is because it can provide a lot of innovation in new businesses like micropayments or pay-per-use models, right? So we need digital money, and that's clear. What alternatives do we have? We have stablecoins that present several risks, as we all know, like, for example, it's difficult to keep the stabilization mechanism, and we already seen some situations where they lost the peg, right? We've got central bank digital currencies, which are right now projects, experiments, so it's going to take its time. And the alternative that we are discussing here, it's tokenizing commercial bank money. And I think that it has a lot of advantages over the 2 previous options. First, because we can keep the 2-tier system that we have right now. That money can be lent. If there's a reduction in commercial bank money going to stable coins or central bank digital currencies, that can impact our ability of the banks to lend money to people that need it, right? And on the other hand, commercial bank money tokens can be more flexible than central bank digital currencies. And we can move faster, the private sector, than the public sector. So that's why I think that we are all so happy or so enthusiastic in the banks about this alternative.
Any other? So, transitioning a bit, we talked the strategic move, we talked the use cases. Let's deep dive a bit further into the actual technology choice. Okay, so Coty, as a CTO, basically, what are your key considerations when you choose, basically, that will drive actually your technology choice when digitizing securities?
Yeah, so on the tech side, I have to say that we are in a very early stage still, and there's a lot of debate around 3 main choices. The first choice is the type of network that you use, and the traditional institutions have been always a bit scared or have found public networks risky from a reputational point of view, from a compliance point of view. And that's why many of the early projects, like you mentioned, the JP Morgan coin, have been developed using private networks. But we have to acknowledge that public networks are evolving rapidly, and we see, for example, in Ethereum that they have changed from proof of work to proof of stake, solving the ESG problem that they had, and I'm sure that they will keep on evolving to have better transaction throughput as well. That is one of the things that in the financial industry we are worried about. So we see that there are many projects moving to private networks. There are some experiments in public networks as well, and some are looking for what they call a universal ledger, like a universal ledger for the traditional financial industry. Projects like the Regulated Liability Network, already ongoing in the US, in Switzerland, in the UK as well. But as you see, there's like no consensus of the type of network that would be the best. And what it's clear that there will be many networks, different types, that will coexist, and we will need interoperability mechanisms to transfer assets and data from one network to another. Probably there's going to be one network for CBDCs, commercial bank money, another one for securities, and they will need to talk to each other. And there are already pilots, for example, on connecting XQLAX with Finality, that it was successful. We did it some months ago. So that's on the network choice. There's another on the protocol choice. And I see a lot of agreement in the industry of using Ethereum compatible protocols because for two reasons. One is the interoperability, because it's interesting to be interoperable also with the public Ethereum network. And secondly, because there's a big community behind that it's going to keep the innovation moving forward. And then the third choice that you have to do is the type of a standard that you use. If you use an ERC20 token, ERC 1400, there's, again, no consensus on that. And we've seen in the pilot regime that there are many projects that are presenting different types of standards. They all have some criteria, some conditions to meet compliance requirements of securities, but again, there's not a winner. And I see that there's some needs on the technology side that are still pending, and they are very important. One is that we tend to think that technology, blockchain technology, it's plug and play, and it's not. You need to adapt to re-engineer your processes, your governance. It's not just issuing the bond on the blockchain. You need to re-engineer all the things that are around that. Second one is that we need interoperability, which is obvious, as already mentioned, that there will many types of networks coexisting. We need privacy. Public networks, information is public, we all know. In our sector, we need confidentiality of the identity of the user and of the data of the transactions, and that links to identity. For this getting mass adoption to tokenize at scale, we need a digital identity that maps your real identity with your digital one. And there are so many other things about the scalability, transaction, throughput, user experience. So that's why I say that we are at that early stage.
Yeah, I think I tend to agree there, of course. And what you just described was the process of setting up this ultra complex ecosystem that we actually have in capital markets. And this is one of the reasons why when we, for instance, we started actually with a private blockchain because there was no way that we will be able to do all the kind of things you just described on a public blockchain or on many public blockchain in a regulatory compliant format. And the point is, and we had numerous instances also in the German market where we had a couple of banks which tried to advance their agenda relatively quickly, and then they came up with assets and structures for their clients, and then the BaFin, our local regulator, stepped in and said, well, wait, I don't understand exactly what you're doing here. Is this really compliant? And then actually the whole thing stopped, and what you have to know is that, of course, if you get a couple of transactions wrong in capital markets, these guys usually come down to you personally. This is not just like the bank gets a slap on the wrist. Actually, it is, who did this? I did a department, and we're doing thousands of transactions. We had one transaction type where we generated 5,000 transactions. We got 8 wrong. Our auditors saw that. They went straight to the board, and the initial reaction was, we have to fire the guys who did this. And this is actually, it's a huge obstacle, of course, on this sort of regulation for all kind of innovation. And this is why you have to do it incrementally. And one way to do this, of course, is to do it in a private environment where you know all the participants and where you can write up all the legal documents. And what we also found out when we did our business is that in many instances, we had more legal documents being written and exchanged on a fax machine between the counterparties, and not less when we do digital issuance and transfer of ownership and all these kind of things. Yeah, so, well, if you want to do this in a regulatory compliant format, and that is a difficulty. Yeah, so it's not about everybody is able to construct a protocol that you are able to transfer some asset value and transfer ownership. You can do that, but can you do that in a regulatory compliant way? That is a big question, and the problem is nobody knows all these kind of regulations because there is no phone number for Mr. Regulator you can phone up. Yeah? In Germany alone, you have 2 or 3 different regulators to whom you have to speak. Yeah? And they are also not exchanging their views. Yeah? And the situation, of course, is much worse in all of Europe.
Building on regulation, as we talk about it, we have like, you have MiCA, you have Pilot Regime, you have EWPG Act, Crypto Registrar, you have Blockchain Act 123 in Luxembourg, you have the Swiss DLT blockchain law, recognizing ledger-based securities. In the end, are you seeing them as business enabler or more a barrier today? Let's start with Klaus.
Well, they are definitely an enabler. I mean, Michael was so nice to share some memories with us about what happens when you do something wrong, when you're not compliant. So compliance is absolutely needed for bank. It's the basis of our business. In a bank, nothing happens if it's not compliant normally. If something happens, it's a problem. It's really a problem. So it's good to have good compliance. MiCA is okay. In Germany, we have the Electronic Securities Act, which started things really going. We can apply for licenses, for getting cryptocurrency licenses and so on. Banks are doing this, and this is a foundation. I mean, this is really a foundation of our business, and I see compliance as an absolute enabler if it's a good compliance. Sometimes you get compliance which is not workable, really. I mean, I had, for example, EMI or something like that, MiFID. It was not nice, yeah, but this, what we're talking about, MiCA, securities, electronic working paper, this is good compliance, and this is definitely an enabler, in my opinion.
Maybe in terms of regulation, what's important to have in mind is that when we talk about MiCA, it doesn't cover the tokenized financial instrument. It covers the cryptocurrency, utility token, probably or not NFTs, but it's only a part of the big family. Tokenized financial instrument that they are already covered more or less by MiFID and all the regulation we have to be compliant with at the moment. So I think that pilot regime is really important because it will be helpful to create a secondary market, but it's also really, when you participate to those products, really interesting to see it because all the current actors in traditional finance are getting really stressed by all those new regulations, and we're all wondering who's going to be on the menu or who's going to be looking at the menu. So every one of us is having a clear view at the whole value chain, starting and thinking of how I could get up or down in the value chain, and that will be the most interesting part of notably a pilot regime.
From my perspective, I think I never buy this kind of idea that regulation is an enabler. Regulation is a bouncer in front of a disco, of an empty disco, who regulates the entrance. You have to ask him, and you have to wait. So and then one day he probably will let you in, and then you can dance on the floor. You would be able to get into this floor without him, but that's not the world we're living. The problem is, you have a lot of bouncers on the European landscape, and you have to satisfy all of their demands to go into the disco and start dancing. There's no way around them.
No, sorry, I totally disagree on this point. Sorry, I have to say something to this. Regulation is a source of trust. Why are trusting people banks? And this is because it's regulated entities. If you have a look at the paper exam, for example, at the regulated liability network, this is a very basic idea behind it. In this paper, Tony said that, for example, commercial bank money and central bank money is not so different because it's both issued by regulated entities, and that's it. Regulation is the very source of trust consumers can have into banks, and so it's a business enabler for us. And that's it.
So I really like the example of the disco, because just like in the disco, you're absolutely right. The path you're going to enter the disco, it depends who you're coming with. I'm sorry, if you're a man and you're having 10 beautiful ladies with you, you're going to come quick in the disco. Be sure about it. So in the tokenized securities business, that's exactly the same thing. You have to prove the regulator you're working with the right companies, that you're having the right process. So I think it's important.
Now that I'm not going to continue with the analogy, but one question that I have is why things are not moving faster. So basically, it's like we were here probably a year ago, things are accelerating, clearly, but it still moves quite slowly. So what should happen if we want at some point seeing these new digital securities and tokenized securities taking over what we call the traditional market? How do you see it? Or what would be this accelerator?
Yeah. So, I mean, this is very, very complex. If you compare to the internet, the adoption of the internet was very quick, right? In some years, because it was something new for all of us. In this case, we are talking about changing the engine of an aircraft while it's flying 30,000 feet. So we have to change all the infrastructure while we continue operating on the traditional one and making it compatible with the old one at the same time. So that's why I think it's going to take its time. There's some studies that say that at least 5 years, because it's not only that we need legal and regulatory clarity. I already mentioned a lot of requirements that we've got from the tech side. Not only talking about tech, I mean, we need a digital identity as well for this to scale. We need the cash leg to be in place. So there's many pieces of the puzzle that we need this to get massive adoption. And as I was saying at the beginning, at the same time that the aircraft is flying, you're changing the engine. So what has to happen? All these requirements that we mentioned, but as we see in the tech business, this is slowly, but then all of a sudden, it all happens, right? So we have to be prepared, and I think that's what all the large financial institutions are doing, getting ready and creating optionality for that, for the moment when it comes.
And I think also the market incumbents, they do not sleep, right? I mean, at the beginning, probably they were quite ignorant about what was happening in the DeFi place. Now they have looked into that and they're also reacting. Yeah? So if I take a look at Deutsche Börse, they actually have a centralized ledger, completely digital. They already issued something like 600 securities. In the same time, we had in Germany something like 55 securities, and Germany is already probably one of the bigger markets. And probably a couple of additional securities in the registered bond market. And we also saw that to a certain extent was what the ECB is doing, at least in some of the versions of CBDC that they're creating, that actually has not much to do any longer with the idea of decentralized cash that Bitcoin probably at some stage brought to the table. And I think actually at the moment they're also like, well, we don't need a blockchain for that, because of course you can do this in all kinds of things. Yeah? So markets incumbents are also evolving, and hence I think this is still an open race. Yeah? So it's not 100% clear cut that the future will be blockchain. I think it's 100% clear it will be digital, but the exact form is probably, from my perspective, not 100% clear.
A word to conclude?
Well, I think what's just missing is a lot of assets. I mean, we have about 800 trillion assets on the capital market. And I think it's nice to say, okay, this is more democratic and blah, 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 blah. To be honest, it's about cost cutting. Yeah. We tried some processes with different asset classes at the Z Bank, and we find out if we put securities or interest rate swaps on a DLT, it's more cost effective. This is really okay, and we want to have this. But if you don't have deep order books and you don't get good prices at the market, the cost saving doesn't count. I mean, it's okay if you save, let's say you save 300 or 500 euro on the processing of a certain deal. This is okay, and you do a few thousand deals a year. You really want this money. You want this cost cutting. Problem is, when you're having 100 million deal or a billion deal, and you don't get the exact same prices, the price of the spread between bid and ask is just a bit bigger than on a traditional platform, nobody's interested in the cost. It just doesn't pay off. So it can be relatively quick when some big players say, okay, we are putting our assets on a blockchain or on a digital ledger or on a DLT, because it's all about the ledger, not the blockchain, in my opinion. It's all about the ledger. If a big player says we are putting our assets on a distributed ledger, then it can become really quick standard.
Okay, so as a guardian of time, I can close right now. To conclude, the world to what we see today, so the infrastructure and the building blocks are getting together. The future looks promising and quite certain based on what we discussed. And now let's continue, and I hope, thank you everyone for joining. And I hope you will have a nice event. Thank you everyone.
Thank you.
Thanks a lot.
Thank you.